Holy F. What happened to stocks today? Because they are crashing. Is the AI bubble bursting? Well, first things first, Jensen Huang, where is the leather jacket? I don't see one on here. And the last time that he had a blowout quarter and he didn't wear it, it was the exact same thing. Stocks all went down. So big gap ups today, and gap ups are for selling. Today was no exception. Here's the curious part. Nvidia actually got more bullish news overnight. This was a perfect setup. And maybe that's exactly what happened, because if we look here, I'm looking at a 1-minute chart. We gapped up right around resistance. On the opening stream, I mentioned that I think we're going to go to 675. I think we're going to back test and fill the gap. And then I don't know. I actually went back to sleep, and it looks like that's what the market did. The sell-off was fast and furious. It just went nonstop. But we took two very short pauses. One right here on the green line, that's 667.34. I'll remind you of where that comes from. It comes from right here, 667.34. That's the September high. So now, after we lost that area, where did we go? We came down to support, and then it lost it. That was the key area. It's exactly what we talked about. So now on the one-day chart, this is pretty bearish. That is definitely a volume climax. It looks similar to here, and it's looking increasingly more like Bitcoin. Why? Well, remember, we talked about this too. So we had the liquidation day right here. We have the liquidation low, and we lost it massively. We're way below it now at $86,000. So it looks like the S&P is just following suit. So now we've actually lost that November low, and we're currently below it. That is no good. The NASDAQ is also below. So with everything red today, what do? Do we trust our gut, or do we trust our levels? Because if now we go back here to the notes, I'm going to walk back in time, because I think a lot of people might be surprised about why we are here. I'm going to walk you all the way back to the beginning of the month. We were sitting at 682 at the time, and I said on November 2nd, this is only about 3 weeks ago. Higher lows are sufficient. Volume is increasing, which is generally bullish. However, warning, falling below 667.34, that means watch these previous yellow boxes, which is what? The start of a bear market. As of right now, the S&P is only down by, let me have a look here. It's like 5% from the high. That is 1/4 of the way to a bear market. A bear market would take us dramatically lower. So going into the first week here, yeah, everything looked fine. It looked like we were going to go higher, but then the pattern did not work out. The NASDAQ actually rejected off a key area. The S&P rejected and lost the uptrend. So we got a gap fill, it rejected. We got these alerts, and oh boy, I was wrong. I thought these were not going to work out so great, but the S&P, the NASDAQ, and SOXX, this gives us a 3-week window of opportunity. I'll show you exactly what that means. If we go here to our system, the algo.com, we can go here to our stock feed, and what it shows us is that our trade alert is good for 3 weeks. If I look here to my signal, well, plus 3 weeks, that was a perfect recipe. It's exactly what happened. Going into the 9th, which was the first week, now this is where we started to break. I said, mixed signals. We got to be patient because we're not sure where we could go. If you look at the algo, we already breached or lost 667. So partial lower wicks. All this really means is that we must defend the weekly higher low, or the pattern is no longer at risk of breaking. It is broken. Well, that's exactly what happened this week. We had an inside bar last week, and then we blew through that yesterday. So we actually got the warning. Sorry, that was on Tuesday. We lost the weekly low on Tuesday. We got a bounce. We got above the 50, and then it completely crapped out. So I said that right here. We were at risk of, we're no longer at risk of breaking. The chart is broken. 665 is the 50 DMA. 652 is the monthly higher low if we lose that area. Where are we right now? 652. We're exactly where I said support would be next. Right from resistance all the way down to support. These two areas here, man, they didn't even hold on at all. Just sliced through them like butter. And that's really telling, because the news versus the reaction to the news is very important. We know the bigger they gap up, the more you want to sell it. Honestly, I did not think this was going to happen today, though. So I am surprised, but I'm not unsurprised. I'll show you one quick thing here, because I know I sound like a know-it-all when I say this, but we want to be less surprised, not unsurprised. My notes were my guide. I don't trust my gut. I trust my levels. I follow my plan. So Today, some people might be waking up and saying, oh my God, this is a really worst case scenario. How could anyone have seen this? You're just surprised. You've never seen this movie before. It's a very bearish movie. It's not fun at all. And here's exactly what I said going into this week on Saturday. I said this: mixed signals again. When in doubt, be patient. We have three weekly full candles, which means that technically there's already been pressure for 3 weeks in a row. We are already deviating from the previous plan, or the yellow boxes. So if it's not working out so far, our goal was to wait until Friday to see whether or not the inside bar break would actually give us clear direction. This is what I said. The inside bar break this week, watch for the reaction in likely the short-term direction. So I wanted stocks to go higher desperately. We got the failed breakdown, but then it did exactly what I didn't want it to. It went lower. The short-term break was the short-term direction. So that bear break was the short-term direction. And as of right now, for our weekly notes, we're sitting here at 4 out of 4 bear. And on the daily, 4 out of 4 bear. It's a bearish engulfing candle. And now, based on the monthly, we're either going to be at 1 out of 4 or 2 out of 4. Unless there is a dramatic reversal, that weekly chart is busted now. The onus is on the bulls to fix it. And the reason why is because I'll go back in time here and show you exactly why. I want to make today's video as short as possible, but I also don't want to make it shorter just for the sake of being shorter. So if we have a look here, here's the first weekly lower low. So that gets us a 2 out of 4 because we closed below. So print the lower low, close below. That's right here. Then we have an inside bar, which means a pause. And now this week, we printed the lower low and we're currently below. Today's Thursday. We have to rally a lot going into tomorrow to save that. So we would have to rally by basically 2%. We have to unwind the entire decline from today tomorrow to only get to 3 out of 4. But that's still a passing grade, which means the onus is now on the bulls to do this: print a higher high. Otherwise, the trend is down. So printing a higher high next week is going to require 676 basically. If we look to our daily chart, that would get us back above resistance. It would also get us back above the 50 DMA. And that would mean that this was likely a capitulation, a bottom. The monthly chart isn't sure what it wants to do, but if we suck back up to 675, we would be back above my pivot as well, which means all the charts would get fixed if only the bulls can do this and then get halfway to a reversal. So if now we look back to here, here's the part that, again, I'm not thrilled to say this, but now that we've printed a monthly lower low, we have to look to where defense is. It's above 610. The quarterly backtest at 613.23, that goes back to 1998. 1998 to 2000 were still some great years, but there was a bear market in between, a nasty correction. And look at where the 200 DMA is right now. So from 50 to 200, it's roughly 613. It was on the weekend. So are we now going to go from here all the way down? Well, potentially. It's not looking good. So if we continue the story now, this was on Monday. I said, watch for the rejection at 674. We either want to see a recapture of 674 versus the 50 DMA. Well, we fell below it. And I warned and said, watch out. We're now bearishly cautious, 3/4 of the way to a bear market on the daily and weekly. And then on Tuesday, monthly higher low is holding for now. Reminder of the notes and good luck to all. So yesterday, we got the higher high. I'm watching to see if we can actually hold it. We didn't. We only got to, we got a failed breakout. Now, what I wanted to see was, can we actually run to the 50 DMA? Well, we did. And here's where I said, watch out. The S&P high of the day is exactly the monthly pivot, a rejection. Come on, Nvidia. And Nvidia did come out, but it was not enough. So yesterday into the close is exactly what I left you with in the video. I mentioned that we got through most of our major events. We got through the FOMC minutes. They sold it off into the close. We got Nvidia's earnings. The job numbers came out and they were actually constructive. So we got everything we wanted from the bulls. But like I mentioned, we have to wait to see what actually happens. Are we going to get a close above the pivot, a close above 674, or do we fill the gap and go lower? Well, I showed you earlier. If we go back here, let's go back to our one-day chart. Let me actually bring my lines back. They're right there. Let me go back to a 1-minute candle because that's the time frame that the market traded on today. So these are the exact areas I was watching. Look, I'm not Nostradamus. I just do my homework. So there's our first test. So we bounce off the green line and we reject on the pivot. That's exactly what we didn't want. So reject on the 50 DMA, lose the monthly pivot, and we didn't look back. If now we look here to say a 15-minute candle, it was very obvious what happened. All lower lows. So that bear recipe that I keep talking about, yes, that would have warned us right here. That would have been our warning. We could have avoided all of this decline. That's a big save from 669 all the way down to 652. So if it works on a 1-minute candle, if it works on a 15-minute candle, if it works on a 1-day chart, if it works on a 1-week chart, why can't it work on a 1-month chart? And if we look here to our 3-month chart, this is really what I'm looking at right here. It's the slam all the way back down in 1998. I'm not sure it's going to happen, but we have back-to-back engulfing candles. Just for time, I'm going to skip forward because I don't want to go through every little detail to scare people. The fact is the notes held up, and all we can do from right here is literally wait until the end of the week, right? Nasty. Watch for 652.85. The 1-day chart is now nasty. Now I want to leave you with a clue on where we could go from here. And if you haven't already, I would really appreciate your support if you could please smash a thumbs up or subscribe to the channel. Thank you very much at a time. So we're going to be launching our product hopefully on Tuesday of next week to the public, and we're going to be launching it on Monday to our internal user base. Here's what I want to show you. This is the S&P 500 and our money line. So not all dips are created equal. If we look here to the 1-day chart, we got a warning that the chart was breaking. We can see that right here, red. What is it? It's a sell the rip. And as of right now, it's only sells. So we got our traffic lights, which are now bearish. But if I look forward here, the weekly and monthly are still green. Here's the problem. We are within 0.0 candles of losing this area. So that would mean that we're now 4 out of 4 bear if we don't rally tomorrow. And if we decline just a little bit more, like I'm looking on my other screen, it's literally like a couple more points. We go below 650, it's over. This is going to flip red. And now we're in a sell the rip mode. So the 1 day would graduate the 1 week to a sell. We're fully bearish on both time frames. And then we look forward to our monthly chart. And if we have a look here, like here's the problem. We're now currently red. We're below the low. And we would have to sell off for another month nonstop before we get that bearish signal on the monthly. Where would that get us down to? Well, basically 613. It's the 200 DMA. It's the quarterly backtest. And it's strong support. So that's pretty much it for today's video. I'm going to walk you through one more very quick update here. Trump is saying that, so this is from today. As of today, Trump's energy department is revamping in Nix's clean energy offices. He's doing a few interesting things here. He's getting rid of the grid, and I think he's going to bring that clean coal back. I just feel it in my bones. I got a really strong feeling about it. So here he's talking about creating new departments, the hydrocarbons, geothermal, and the Office of Fusion. And he's basically talking about how they want to do, where is it on here? They eliminated all the stuff. So they want to bring back energy dominance. Where is that? Energy dominance. So they've renamed the loan program office to Office of Energy Dominance Financing. I think there might be an energy revolution coming. And here's exactly the reason why. So we're going to go back to our review from the weekend because I was talking about coal back then. So coal and gas, which is what we need for basically the issue we're having right now. It's the data servers. There's not enough power to power these data centers. And the US is the only game in town when it comes to data centers. So Trump likes coal. Back in April, he said, we're going to bring coal back. Coal or metallurgical coal is now a critical mineral along with uranium. So let's read this headline here. Fusion? Wait, what's fusion? Oh, that's nuclear. Yep. So we got hydrocarbons. We got uranium, right? That'll be your nuclear or your fusion. The U.S. is already an investor in Westinghouse, which is the nuclear provider. But here's the part that's really curious. I've not seen any other company use this branding. Clean coal. WTF. Clean coal. Oh, wait, Trump loves coal. Loves it, loves it, loves it. There's been $355 million for conversions, $100 million for retrofits, and anything can go in here. I'm not going to jump into all the details because we already talked about this. They've specifically said they want to power AI data centers. And now, if we continue the story, there's one more quick thing I want to show. It's basically this. So we talked about how B&W could do thermal enduring system. I'm seeing much more evidence this is coming true. Westinghouse, That is the nuclear one. And then we got the Trump administration. Well, this is exactly what they want. I think this is ready to get signed. As of today, it passed the Senate and it's ready for Trump to sign. The last one was signed in the White House. Here's something else that's really curious. Inside of this article, it says this: a pipe carries emissions to a carbon capture project at generation stations in Thompson, Texas. Carbon capture? Huh? And Trump got the headline out just before the wrap up the COP30 and just before the communique from the G20. Here's why it's so curious: a coal stockpile at a power plant in India. Why are they talking about coal if it's Brazil? And why do they show an Indian power plant with coal in it? Oh, wait. This article from today: India's reliance is going to stop using Russian oil in part of Jamjar. So what does this mean? Well, U.S. sanctions are biting, and it's forcing them to pivot away from Moscow. So if they don't have this and they don't have domestic oil, what are they going to do? Well, the way that I read Trump's headline is that he wants to export coal. So India, coal stockpiles, is he going to be shipping it over there? Because the G20 is also pretty important. And here's what's curious. He's basically saying, no, no, no. There's not going to be a joint communique this year. We don't want you guys to write anything officially. So what he basically says here is that U.S. officials denied this by saying they would not send a representative to the ceremony making the handover to the G20 presidency. So what does that mean? The G20 hasn't even started, but already descended into petty taunting. This basically talks about how they don't want to agree with what they're doing. And let's just read this right here, back from Brazil. They are not shifting away from fossil fuels. Well, that's a complete 180 from what they said before. So why does all this matter? I think Trump is going to seize the opportunity to say that the U.S. revolution is back. We're going to power AI with American energy dominance. And I think that maybe that could have a really big comeback. That's it for today's show. So I'm going to leave you with one more resource. It's a video right here on the left. If you want to click on that, it's a stream from this morning. I'm not going to be on the stream tomorrow. I will be back on Monday. So with that said, I wish everyone the best of luck, and I will see you on Monday morning. Thanks so much.